200. So that's basically just the balancing amount. So that's a debit balance. So asset disposal gets credited with, so that's accumulated depreciation, 49200. All right. Sorry about that. Sorry that I forgot that. But anyway, so that's the balancing amount over there. All right. So we removed the cost price. We calculated the depreciation up to the point where it got sold because it's in the middle of the year. Then we removed the accumulated depreciation by balancing that. And now we need to add the selling price. Okay, so we sold it. What do we do? We sold it on credit, so that'll be your debtors control. Now remember also from bookkeeping to trial balance, your debtors control is a main account, so that'll be your VAT. It will be your VAT exclusive and your VAT inclusive amount. Okay, so that'll be your VAT inclusive amount. So debtors, the other leg will be asset disposal and VAT. Asset disposal, so the VAT inclusive amount is 116932. So that's 116932. So it's asset disposal plus VAT, don't forget that. So in other words, your VAT amount, which we calculated here, will go here, so that'll be debtors control, 15252, and then your VAT exclusive amount now will be added to your asset disposal. Okay, so that one gets debited, so that one then will get, debtors control will get credited. So that's your debtors, and that's 101,680. All right, there we go. Okay, so when we have to do with VAT, when they give us a VAT inclusive amount, you need to know when you get to the add selling price, your debtors increase with the VAT inclusive amount, your VAT gets removed, and then the VAT exclusive amount gets added to your asset disposal. Okay, I hope you guys are happy. I think I have never been so dear mekaar like I am right now. But anyway, let's carry on. So we added the selling price, and now we need to do the profit and loss, which is just simple because you just have to balance your asset disposal amount. Okay, so the highest amount here will be the debit balance, so that'll be 164,000. That's 164,000. So you balance it, and as you can see, it's a credit balance. So in other words, we actually made a loss to zero. So when we move it to our profit and loss account, so this will be asset disposal, debit amount of 13120, equity minus plus. Okay, let's see, have I got everything now? I hope so. I'm going to recap this thing now. So like I said, the only thing I could see was this mistake is I think they got their dates wrong, because their dates don't quite correspond with their answer. But if I did miss something, please let me know. I will be very happy to know if I did miss something, and then I can try and fix it. All right. So let's recap this. So when you do when you sell an asset in the middle of the year, number one, you get the info together, you get the T accounts ready, you add the balances they give you, and HP information if it's necessary. Then you start the process, you remove the cost price, Then the added item of you calculate the depreciation in the year, because remember that is only up till that point. That depreciation must still be added, so that just goes into your depreciation account. From your depreciation account, it gets added to your accumulated depreciation account, and then you work from there. Then you remove the accumulated depreciation by debiting your accumulated depreciation account. You add your selling price, which we've done, and just remember when VAT is involved, your debtors control is your it's asset disposal plus VAT. Your VAT gets taken out, because remember money comes in, so it's VAT output, you have to pay that money back to SARS, and then your VAT exclusive amount get added to your asset disposal. Alright, and then we don't need to calculate the new depreciation because we only had one item, so we don't have to worry about that. Alright, I hope you guys have followed me. I know I'm not on my best today, but I do hope that it helps. Alright, okay. Alright, okay, so I'm done with this one. And, okay. Okay, and more papers. Like I said, sorry, I dropped my ruler. Wow, this is one long lesson. Luckily, you guys are lucky. You get paused and I have to keep talking. All right. And now we're just going to quickly look at the disclosure of depreciable assets. That is just when you do your financial statements, you're going to have this thing for your property, plants and equipment, and you need just to explain and show the movement of assets during the year, like when something gets sold or, whatever. You just need to be able to explain it. Now, the example I'm going to do, I'm actually going to do self-assessment activity 4. Okay, and I'm just going to show you just quickly how to calculate stuff. So which one are we doing first? Let's see. Okay, first of all, in self-assessment activity 4, you can see there's land and buildings. So they don't really give you any extra information about the land and buildings. So that means there was no movement of the year. There was no depreciation on buildings, and there wasn't actually, because let's face it, buildings don't depreciate. You have the cost price stays the same. Okay, so if you can look in the answer sheet, you will see land and buildings, 400. That's your carrying value. Remember, your carrying value is your cost price minus your accumulated depreciation. There's no movements during the year, and then your carrying value at the end of the year was obviously still the same. But now we're going to go look at the vehicles, and it looks like I am drawing pictures again. All right, let's go. All right, so they give us the cost price balance of vehicles. They give us the accumulated depreciation. All right, so let's draw pictures. All right, so let's see. Okay. Okay, so let's see. So this is vehicles. The year is 280203. So it's vehicles. Oh, it's nearly lunchtime. Have I been talking that long? Oh my goodness. Okay, so it's vehicles with a cost price of 240,000. That's what they give us. And accumulated depreciation of 70,400. And then they're telling us the depreciation is 20% per annum, and it's diminishing value, DV, diminishing value. All right. And then what else do they give us? They give us extra information. They say, okay, on vehicle 20% per annum. And then on 28 February, a vehicle with a cost price of 80,000. Okay, and then they say 28 February. Okay, let's go. So this will be 10303, and this will be 280204. Okay, so they say, let's read this. Because they sold a vehicle, cost price 80,000. Accumulated depreciation 39040. Selling price, which is kind of irrelevant, 40,000. Okay, so let's see now. All right, so they give us the vehicle and they give us accumulated depreciation. Now, one thing you need to know, when they give it to you like this, the accumulated depreciation is actually what the accumulated depreciation was at the beginning of the year. I don't know why they write it like this, but it's actually at the beginning of the year, because as you can see, it's not the new financial year end. If it was the new financial year, that would have already been added. So the accumulated depreciation is part of that accumulated depreciation, what you're seeing there. Okay, I don't know why they do it like that, but that's just something just to remember. Okay, so let's see, what have we got and what do we need to work out now? Okay, so first of all, let's go look at the vehicles column. I'm just going to go up there. All right, so in the vehicle column, the first thing you have to add the cost. They give you the cost, so you don't even have to think there. The accumulated depreciation, they give you the accumulated depreciation, so that's it. Then we go to movements during the year. Additions at cost, we didn't buy anything extra. Then disposals at carrying value. Okay. Okay, so first of all, now we have to go back to that formula there. So disposals at carrying value. So the carrying value is your cost price minus your accumulated depreciation, right? I think I did mention that. It's your cost price minus your accumulated depreciation. So first of all, they give us the cost price, right? That's 80,000. Minus, now please remember this, accumulated depreciation is 39040. That's 39040. But now what do we need to remember? Remember what I said? The accumulated depreciation is actually from the beginning of the year. So in other words, we need to calculate the accumulated depreciation, or the depreciation of the vehicle that's basically that's sold. Am I right? So in other words, you need to take it, so to calculate the accumulated depreciation, you need to take the cost price minus the accumulation, which they give you, times 20%. So in other words, that'll just be 80,000 minus 39040, and you multiply it by 20% because it's 20% diminishing value balance. Okay, so that will be 80,000 minus 320%, and that gives you 8192. So you just have to access it. So then when you do the other formula, you need to minus the extra depreciation that has to be deducted from the amount. I know that can confuse people, so I'm just going to write it here. So it's your CV, it's your cost price minus your accumulated depreciation minus the depreciation or the extra depreciation. I'm just going to call it that, extra depreciation. All right, so in other words, that'll be 800 minus 39 waka waka minus ayakale, and that gives you 32768. Okay, so that's the disposal at carrying value, and you will see that's 32768. And then we need to depreciation for the year. Now, once again, we've actually already, just want to check. So we've 25 plus 8. Okay. So now we have to calculate the depreciation for the pool, because remember, depreciation for the year. So we need to calculate now the new depreciation after this item has been sold. So first of all, we need to calculate the depreciation of the sold item, which we've done. So that is 8192. And now we have to calculate the depreciation on the pool. In other words, on the items that are still left over. So in other words, how you do that, another formula then is you take your starting cost price, because remember, we are working with your depreciation, I'm right. So you take your starting cost price minus your CV, which is your carrying value, and as you can see, we've got the cost price and we've got the accumulated depreciation, so we can actually calculate that, minus the CV, minus the starting accumulated depreciation. Well, actually you can just take this, you can actually rewrite it to say it's a starting cost price minus the starting accumulated depreciation, because remember, that's how you calculate the diminishing value, and then minus your CV, and your CV, and remember, your CV is your cost minus your depreciation. So I know it's a lot to take in, but just use this formula, you'll be fine. So in other words, that'll be 240,000 minus, now if you take the CV, you take 80,000 minus, because your CV is your cost minus accumulated depreciation. That gives you 40960, so it's minus 40960 minus your starting accumulated depreciation 0, and you multiply that by your 20. And that gives you 25728. Okay, so that then, as you can see there, sorry, so we work 25728, and then we need to add that 8192. So you first calculate your depreciation, or basically your full depreciation minus minus the CV and all that stuff, and then add the other depreciation that you've calculated of the vehicle sold for that year, and that will give you 33920. Okay, am I right? Yeah, I am actually right. Can't believe it. Yay. Okay, 33920. Okay, so then in order to calculate then the cost, then the carrying value at 29 waka waka, all you do is you take this cost price, 240, minus the cost price of the item sold. So that's 160,000. Yeah, 160, and there you see, and then you have to calculate again the accumulated depreciation. The accumulated depreciation for the year. So to calculate that, sorry, I'm just going to quickly wipe that. Then to add your accumulated to the year, that will be your starting depreciation minus your accumulated depreciation of the item sold plus, remember now when we calculated the pool depreciation of 25728, I'm sorry, I just wiped that part, and yeah, so it's that plus that plus the yearly one of, plus the yearly depreciation, what we've just calculated. So that'll be 70,400 minus 39040 plus 25728, and that gives you 57088 and 57088. Guys, I know this is an awful lot to take in, and I know this is but I think just take your time as you go through it. I know there's an awful lot and you need to know all these formulas. And so I hope you could follow me so far about what I've done. Like I said, there's a lot of work, and it took me a long time just to get things, well, get it all in my head. Okay, and then last but not least, I think this one should be rather easy. Oh, I should have just kept the dates up there. Okay, so they're giving us equipment 52,000 and then accumulated depreciation 24600. So this will be 280203, and this will be 1 March 03. So they're giving us the cost price of 52,000, and they give us the accumulated depreciation 24600, and they say it's 10% on cost, so that's always an easy one. Okay, and equipment 10% per annum. The computer was purchased for 24. Easy on 1 March. So let's just quickly have a look at that. So the cost and accumulated depreciation for the carrying value at 28 February 2003. That's the information they give you that. So that's additional additions at cost. That's actually quite easy because they just bought the 24,000 computer. You put that in. Now you have to calculate the depreciation. So in other words, to calculate the depreciation, it's just your cost plus the cost of new computer times 10%. So that'll be 52,000 plus 24, so 24,000. Well, that's an expensive computer, times 10%, and that gives you 7,600. Voila, there's nothing funny there. I wish everything could be this easy. And then your cost is obviously just your old cost price plus your new item, so that's 76,000. And then your accumulated depreciation is your starting depreciation of 24,600 plus the 7,600 of the new item, because it's a whole year, and that gives you 32,200. Okay, I hope I didn't scare you guys. Please just, I think when you watch this video, just try not to look at my double-mindedness, and just try and see how the calculations work, and just make some extra notes for yourself just to keep track of it, how to track it, learn those formulas, and then just try and put it all together. So good luck with this. I'll hopefully have more videos coming soon. And so again, I just want to apologize for my absent-mindedness, but I know you guys are smart, so good luck. Thank you.